Despite the fact that FIs continue to remain net buyers, though a smaller amount of 500 crores compared to the 1500 crores yesterday, the large cap indices and the mid cap indices remained under pressure today. Yesterday they were up 0.5%, if you recollect, because of the closing action system showing a sharp spike yesterday. Today, the very closing auction system brought down the Nifty stocks today, all the F&O stocks, in fact, and that's why you find that not just the Nifty was 0.5% down, but the new index that we talked about, that is the Nifty 150 FPI index, right, was also 0.5% down. So clearly, then what happened? Where did the 500 crores of buying? I mean, 500 crores is too small an amount to really make a move difference. But despite that, if the large cap index was down, I hear today in the news that there were a lot of block deals done of small sizes, but a number of block deals, and probably the FIs were buyers in some of those, and that reflects it. And they were not probably in the top 50 stocks. So that's why you saw the that Nifty and the FPI index are in the negative today. But the good news was that DIS, who yesterday bought in 230 crores, if you remember, now I feel that it was probably because of the fact that it was the expiry day, and they were first time under the CAS there was an expiry day, and I think DIs were a bit apprehensive about how it's going to go, so they stayed away. Because today they bounced back strongly with 6,500 crores of buying. And Nifty also appears to have bounced back strongly because the advanced decline ratios were 1700 favoring and only 1400 down. And plus, you saw that the micro cap indices and the small cap indices both were reasonably positive today. Small cap up 81 basis points and micro cap up 61 basis points. So clearly a domestic driven market today. FIs marginal sellers but could not bail out the Nifty. And moreover, I hope you saw my comment yesterday's. Yesterday's buying also was accompanied by a reflection of the short covering. Almost 40,000 contracts got short covered last on the expiry day yesterday, coming down from 2,20,000 Nifty index shorts to about 1,80,000 shorts. So that's what it is. So today the main driver of this positivity was the fact that Brent crude, because Iran and Oman are appearing closer to a solution to opening a third an alternative pathway which are going to clear our minds. So that news has eased up, and Mr. Trump and Besant's threat, or the whatever has been bluff has been called, right? Otherwise, the exchange market was closed today for Milad Nabi, and some other good positive news was there in terms of the domestic front. Let me round up with that. The first is, of course, is the fact that gross FDI in the first quarter is been $30 billion of money coming into India. Net FDI also turned positive because Indian companies investing overseas or dividends being paid out were less. But I think the gross FDI is the one, because since June 2022, this is the strongest level. So it augurs well for the capex cycle if this money is coming into manufacturing, really speaking. Second is that on the retail side, people are now increasingly willing to borrow, if I may say, because credit card outstanding rose almost 10% in the month of July, YOY. HDFC Bank added 2.3 lakh credit cards, and ICICI Bank recorded the strongest growth with card outstanding, which is spending rising 9% YOY. Monthly spends 8%. So as the festival season goes, looks like people are willing to swipe their cards more, which in a way is good for the fact that consumption demand will probably good boost, good ahead of the festive season. I'm sure all these card companies will come up with their offers and deals. So that's positive indicator, though of course there are people who say that is this credit card culture increasing good for the country. I would like to hear your opinion on that, on whether you think this is going to lead to a retail debt crisis with people. Do you feel, are you all worried about it? Do let me know. The other good news from a capex cycle, this was a consumer related good news from a capex cycle, was the fact that L&T has disclosed winning 13 orders since early July from the Gulf region, which means that with the crisis, with the Gulf crisis still going on, but it looks like the Gulf countries are starting to rebuild capex, and that's a good news because not just L&T, a lot of other Indian companies also do turnover contracts and projects in the Gulf region, and so this is good for the capex cycle. And I think the high oil prices have helped these countries in a way to build up their balances because they're all oil producers mostly in the Gulf. So that's the one news. The other news, which is of course is that from the US side, is that the consumer inflation, the personal consumption expenditure in the US, came 0.2% month on month above the expectations of 0.1. And annual inflation also remained elevated at 3.7. And within the inflation core, which is without food and fuel, also rose 0.2%. So indicating that the price pressures are sticky. So that, though we'll wait for the Fed governor, the Jackson Hole conference is due this week. We'll wait for that, but this is not a positive for any rate cut cycle to happen. And finally, all eyes will be on the Nvidia results tonight. After US market closes, I think they are going to release their results. So market is eagerly going to look, can they sustain that AI-driven growth boom? Because a lot of companies are spending on AI infrastructure, and increasingly markets are concerned about whether there is going to be a return on investment on all that heavy AI spending. But definitely Nvidia's results will set the tone because they are the bellwether AI stock, and so let's see how that goes. In terms of sectoral performance today, to round up, I think the metal index strongly up today, 1.3% across all kinds of metals. And the banking sector, financial services, banking, private PSU bank, all were among the top performers. They were the metal plus banking and financial services. What sectors didn't do well today? Well, despite the fact that the micro cap and the small cap were positive, you saw that there were a lot of indices in the negative side today. IT led the pack with a 1.5% down, infra, consumption, FMCG, consumer durables, real estate, auto. So all the consumption related thing had a negative today. So there's no trigger for it as such because I think no news there that it is going to lead to a rate hike or anything from RBI, but just a kind of nervousness was there in the broader rate sensitives today. So that's it. I have also written a note on the new index that we talked about yesterday. I hope you managed to read it, and I also put up a small video earlier today just explaining that index. Like I said, I see it as a key part of tracking the FI things, and today, for example, it was in sync with the Nifty. But that index has by and large been beating the Nifty and the Nifty 500 from which it's carved out, right? So please do make a mention and read it, and do give me your feedback. Thank you, and look forward to talking to you all tomorrow.